China is sitting on silver stockpiles while America is scrambling to secure supply. Trump just declared silver a strategic asset. And what's happening right now could send prices past $150 an ounce. If you're not paying attention to this trade war, you're about to miss the biggest shift in the silver market in decades. Welcome to the Silent Ledger, where we uncover the financial moves that shape your money. I'm here to break down what's really happening between Trump's new silver strategy and China's export restrictions, and why this geopolitical chess game is setting up a price explosion that most investors are not prepared for. If this kind of analysis helps you see what's coming before it hits, go ahead and hit that like button right now and subscribe so you do not miss what happens next. Let's get into it. Here's where we are. Silver just crossed $100 per ounce for the first time in history. That alone is a headline. But what's driving it isn't just market speculation or inflation fears. It's something much bigger. It's a full-scale resource war between the two largest economies on the planet, and silver is right at the center of it. This isn't about jewelry or coins anymore. Silver has become a weapon in a geopolitical battle that most people don't even realize is happening. Let me paint the picture for you. The Trump administration recently issued an executive order reclassifying silver as a critical strategic material. That means the US government now views silver the same way it views lithium, rare earth elements, and uranium. It's not just a commodity. It's essential to national security. And that changes everything. Why would they do this? Because silver is no longer optional for the future they're building. Electric vehicles need it. Solar panels can't function without it. The AI boom that everyone's talking about requires massive data centers, and those data centers need silver for their circuit boards and cooling systems. The Defense Department uses it in missiles, radar systems, and electronics. If you want to build the economy of tomorrow, you need silver. And right now, the United States doesn't have nearly enough of it. Here's the problem. The US produces very little silver domestically. Most of the silver mined in America comes as a byproduct of copper, lead, and zinc mining. There are no major primary silver mines operating at full scale in the United States right now. So where does America get its silver? Imports. And who controls a massive portion of the global silver supply chain? China. You see where this is going. China doesn't mine the most silver in the world. That title goes to Mexico and Peru. But China controls the refining, the processing, and a huge chunk of the distribution. They've spent the last 2 decades quietly building dominance in the supply chain for every critical material the modern world depends on. They did it with rare earths. They did it with lithium. And they've done it with silver. And now, just as the US wakes up and says we need to secure our own supply, China has started restricting exports. Let me be clear, this isn't an official ban. China hasn't stood up and said we're cutting off America. That's not how they operate. Instead, they've introduced new export licensing requirements. They've slowed down approvals. They've created bureaucratic delays that make it harder for silver to leave the country. And they've prioritized domestic consumption. In practical terms, this means Chinese silver is staying in China. And the rest of the world, especially the United States, has to scramble for what's left. This is economic warfare dressed up as policy. Now let's talk about why Trump's administration is moving so aggressively on this. It's not just about securing silver for future tech. It's about leveraging it as part of a broader strategy to reduce dependence on China across the board. Trump has made it clear that his trade policy is about reshoring supply chains, taxing imports, and forcing American companies to manufacture domestically. Silver fits perfectly into that vision. If you want to build solar farms in Arizona, EV batteries in Michigan, and defense systems in Texas, you need a domestic silver supply. You can't rely on a rival superpower to provide the materials for your national security. So here's what the executive order does. It fast-tracks permits for new silver mining projects on federal land. It offers tax incentives to companies that process and refine silver in the United States. It opens up funding through the Defense Production Act to support domestic production. And it creates stockpiling requirements, meaning the government itself is now required to hold strategic reserves of silver, just like it does with oil. That last part is critical. The US government is about to become a major buyer of physical silver. And when a government with unlimited purchasing power enters a market that's already tight on supply, prices don't go down, they go up. Fast. Let's talk numbers for a second. The global silver market is small compared to other commodities. Total annual silver production is around 850 million ounces. That sounds like a lot until you realize that industrial demand alone consumes more than half of that. Then you add investment demand, jewelry, and now government stockpiling. The market is already in a deficit, meaning more silver is being consumed than mined. And it has been for several years. That deficit was manageable when there was surplus inventory sitting in vaults. But those inventories are shrinking, fast. And now you have two superpowers fighting over what's left. China isn't sitting still either. They're not just restricting exports for fun. They're doing it because they need silver too. China is the world's largest producer of solar panels. They're leading the race in electric vehicle production. Their military modernization program is in full swing. And all of that requires silver. So from their perspective, why would they export a critical resource to a rival when they need it themselves? This is classic resource nationalism. And it's exactly what happens when two global powers realize they are competing for the same finite materials. Here's where it gets even more interesting. Mexico, the world's largest silver producer, is caught in the middle. The US has strong trade ties with Mexico through the USMCA agreement. Trump's team is already in talks to secure long-term silver supply deals directly with Mexican mining companies. If those deals go through, it effectively locks China out of a major source of silver. That would be a huge geopolitical win for the US, but it also means less silver available on the open market, which again pushes prices higher. Every move in this chess game reduces available supply and increases competition for what remains. Now let's talk about what this means for price. Silver has already jumped from $30 an ounce just a year ago to over $100 today. That's more than a 300% increase in 12 months. Some people think that's the top. They think it's overheated and due for a correction. But when you understand the structural forces at play, you realize this might just be the beginning. The ratio between silver and gold has historically averaged around 60 to 1. That means if gold is $2,000 an ounce, silver should be around $33. But right now, gold is trading over $3,000 per ounce. If silver were to catch up to its historical ratio with gold, it would need to hit $50. But we're already way past that. Why? Because this time it's not just about monetary value or investment demand. It's about industrial necessity and national security. Silver is being revalued in real time as the world realizes it's irreplaceable for the technologies that define the 21st century. So where does $150 come from? It comes from the math of supply and demand under pressure. If the US government begins stockpiling, that's tens of millions of ounces coming off the market annually. If China continues restricting exports, that removes another chunk of available supply. If industrial demand keeps growing, especially from AI infrastructure and green energy, that's another 50 to 100 million ounces per year. And if investment demand surges because people start realizing what's happening, which is already beginning, that adds even more pressure. When you model all of that out, $150 isn't a wild guess. It's a conservative estimate of where price has to go to balance supply and demand. Some analysts are even talking about $200 or $300 if this situation escalates further. But let's be real for a moment. This isn't a guaranteed outcome. There are risks. If the global economy slows down dramatically, industrial demand could fall. If new silver mines come online faster than expected, supply could increase. If diplomatic tensions ease and China reopens exports, prices could stabilize. But right now, none of those things seem likely. The trajectory is clear. Demand is rising. Supply is tightening. And two of the most powerful governments on earth are competing for control. That's a recipe for a price spike, not a pullback. Here's what you need to understand as an investor or just someone trying to protect their wealth. Physical silver is becoming harder to find. Dealers are reporting delays. Premiums over spot price are rising. That means even if the paper price of silver says $100, you might be paying $110 or $120 to actually get your hands on a coin or a bar. That spread tells you everything. It tells you the market for real physical metal is tighter than the futures market suggests, and that gap is only going to widen as this situation develops. If you're thinking about positioning yourself in silver, whether that's through physical metal, mining stocks, or ETFs, now is the time to pay attention. Not because you want to chase a rally, but because the fundamentals have shifted. This isn't speculation anymore. It's strategy. Governments are treating silver like a strategic asset, and you should too. The silent ledger has been tracking these moves for months, and everything we've seen points to more volatility, more competition, and higher prices ahead. Before we wrap up, I want to hear from you. Do you think silver hits $150 this year, or is this rally going to stall out? Are you buying physical silver, or are you staying on the sidelines? Drop your thoughts in the comments below. I read every single one, and I want to know where you stand. And if this video gave you a new perspective on what's really happening with silver, do me a favor and share it with someone who needs to see it. This is the kind of information that doesn't make the evening news, but it's exactly what affects your money. Here's the bottom line. Trump's silver strategy and China's export restrictions aren't just headlines. They're the opening moves in a resource war that's going to define the next decade. Silver is no longer just a metal. It's a strategic asset, a national security priority, and a critical component of every major technology shaping the future. When two superpowers start fighting over a finite resource, the price doesn't stay flat. It explodes. And if you're not prepared for that, you're going to watch from the sidelines while others profit. The smart money isn't waiting to see what happens. They're positioning now while there's still time. Thanks for watching The Silent Ledger. If you want more analysis like this that cuts through the noise and shows you what's really moving markets, hit that subscribe button and turn on notifications. I'll see you in the next one.